Hello everyone, welcome to the Trendline News channel. So in today's video, I'm going to discuss 4 stocks from the small cap, mid cap space and 4 stocks for a SIP investment for the next 3 to 5 years. So before we get started, this channel is purely an education channel and all the information and the content that I share in my videos are purely meant to help you understand how you can invest and trade in stocks. So there's a lot of content on my Learn with Trend Investor playlist. So in case you're new to my channel, do check it out and you can learn a lot from me. So let's get started. The first stock for today is CEAT from the mid-cap space. Now CEAT is a very good company in the tire manufacturing space. It's in fact one of the leaders. It has around 8,400 crores market cap. PE is 40.8, ROC is 9.42, ROE is 6.4. Now, the key thing to note here is the sales growth that this company has been having in the last 3 years. It has grown its sales by a good 19% CAGR in the last 3 years, whereas the concerning part is the profits. The profits have not grown that much. It's been kind of minus 6% growth, and that's something that you want to take a note of. Now, since 2012, the company has almost more than doubled its overall sales. In fact, the last 2 years have been very good in terms of sales. We've gone from 6,000 crores to almost 11,000 crores. So most of the growth has come in the last couple of years. Now, as I said, the profits have taken a beating. Now, that's primarily because of the operating margins. If you see here, we were around the 14% mark in 2016. Then from there, it has come down to 10%, 9%, and now we are around the 8-9% mark. So I think the margins should stabilize around the 8-9% mark, and we should probably increase the margins going forward. I'm not sure if that will happen, but that's what I am predicting at least. Now, the profit before tax also has it went down last year, especially in 2022 because of the low margins, and then we also had some high depreciation here and also high interest rates. So the interest rate and depreciation is also something that we have to take a note of. They have been very high, which is impacting the bottom line, right? So PAT also is down. So overall, I think given it's a good company, I think they would have some strategies to overcome this slowdown in the overall PAT, and I think we should do probably good in the next couple of years. So let's take a look at the technicals. The technicals are looking very good, and that's why we're looking at a stock. Now, most of us, I think we have this bias that if a stock is fundamentally not good, we don't tend to invest in such stocks. But what markets do is they try to predict markets in advance. Markets are always at least a couple of quarters ahead in terms of the price appreciation or the price depreciation, right? Or the price up move or down moves. Now here, if you see, we were having a 5.5-year breakout. So last month there was an attempt, but we had a long week. But this month we had a very good closing in terms of price, and we have closed at around a 5.5-year high price, and I think we can head higher here. Also, this channel, if you look here, we have multiple touch points here and we have 2 touch points here. This channel is a beautiful channel, and I think we have done a time correction for the last 5 years or so, and now we are breaking out and we are heading higher. So that's some good price action over here. Also, the volumes have been very good for the last couple of quarters, couple of months as well. So overall, this is a very good buy candidate. Current market price at 2080. We're going to keep a stop loss of around 10%, which is around 1880, which is around the swing low on the daily charts. And we're looking for targets of 63% from here, which should be somewhere around the middle of the channel, right? So that's always the first target. And then you look for the next targets once we, kind of sustain and then break out from there. But this brings us to a risk reward of 6 times the stop loss. So 10% is the stop loss, and we're looking for targets of 60%, right? So that's 6 times the risk that we're taking. So that's the first stock for today. The second stock for today is again a very profitable company, but again the price has not done much. Which is Gujarat Port Pipavav Limited, right? So again, it's a mid-cap company around 5,000 crores, 6,000 crores market cap. ROC and ROA are pretty good. PE also is good, and the sales and profit have been almost kind of flat for the last 3 or so years. But if you look at the numbers here, so again, the sales have gone up almost 50% in the last 6 years. It is a very good company in terms of operating margins, has almost 58%. It's just been stable. So it's a port business, so it wouldn't grow that much. But given the recent focus from the government to increase the number of ports in India and all of this, I think these companies can actually do well going forward, right? So also the PAT has increased, and it's at all-time high, 313 crores, almost at all-time high. And that's one of the reasons why I'm discussing this stock. Now, if you look at the stock has been in a very strong downtrend since 2016, right? So it was listed in 2011. It went sideways, and then we had a massive run up, And then since then, the stock has been in a steady downtrend. Right now, for the first time in almost 7-8 years, the stock is attempting a higher high. Now remember, a stock enters an uptrend when it starts forming a higher high. By higher high, I mean, so previous high when it crosses for the first time. So if you see in this entire move, it never crossed the previous highs, right? So that's a very strong downtrend. It always goes like this and never crosses the previous highs. And for the first time, we are crossing the previous highs, right? Now, usually when a stock crosses this on the monthly time frame, on the weekly time frame, these are very good signs because the larger trend is up, and there might be some fluctuations in the daily charts on the short term, but eventually the stock has a higher probability that it might head higher from here. Also, we had a very strong green candle after 2 months of sideways consolidation. We had a very strong green candle with increased volumes. Also, the volumes have been amazing in the last 1 year or so, right? So that makes it a very good buy candidate for your portfolio. We're going to enter at current market price 123, stop loss of just 10% again here around 10.6, and we're going to look for targets of 38%, which is 170. Now 170 would mean somewhere around that highs over here. Now we can eventually head to all-time highs as well, but as a first target, we're going to look for something around this zone, and then the stock might eventually head higher. That's the second stock for today. The third stock is Midhani or Mishra Dhatu Nigam, right? Now, before I proceed with this, in case you're new to my channel, do subscribe to my channel and like this video as well. And if you've been with me for quite some time, let's share this video with your friends. And a lot of you have been appreciating my content, but we are not getting a very good engagement. So I want you to also comment in my video and tell me what are your picks for this amazing run that we are having. And probably I can share my views as well. So let's discuss Midhani now. Again, 5,000 crore market cap. PE is very good. ROC is also good, not very overvalued. But the interesting point to note here is the sales growth, which is 7%. So if you see here, the company has almost went from 360 sales to almost 879 crore sales, right? Again, it has been kind of flat since 2016 to 19, in fact 20 as well. And the last couple of years, there has been a slight tick in the sales growth. Again, a very high profitable business. If you see, we have an operating margin of 30%. It has gone up from 15% to 30%. Now that's very good for this company, and that's probably what is, they're expecting probably the sales might head higher, which will eventually give a higher profits as well because the operating margins are higher here. Also, the PAT hit an all-time high in 2021, but then we have again dropped. But overall, if you see the operating margins, operating profits have been very good for the last couple of years. So I think it's a very good company in terms of fundamentals. So it's just a matter of time the stock starts performing. In fact, we had an amazing breakout this month. The stock was listed in 2018. We had a massive sideways consolidation. Again, we went sideways. So this is kind of a base on base structure, right? And we had a breakout. Now, a base on base structure, I'll make a detailed video on that. But I think these are setups which will give good, returns in the next couple of years, because we had a first base, we didn't really rally much, and we had a second base. So it's just a matter of time before we head higher here. Also, volumes have been very, very good here. And the candle also this month has been excellent. Now, one of the best ways to also buy this stock would have been to buy around this trend line reversal when we had here a strong wick over on the lower side of this candle. That also could have been a very good buy point or entry point. So you can buy the stock at current market price 307. Keep a stop loss at 12%, and we're going to look for targets of 400, which brings us to a 2.5 times the risk that we are taking here. Now, I've been conservative in this stock, but I think we can head even probably to 500 levels in the next 1 year or so, or even next 2 years or so. Now, all of this stocks, if the markets do not do well, the stocks will not do well. So there is no holy grail. There is no one in the world who can give you returns when the market is not doing well. So the markets are doing well. That's why most of the stocks have been doing well. You just have to manage your risk. When the markets go down, you just cut down your losses and you don't buy anymore, and you buy again when the uptrend starts. So that's how you have to approach markets. Okay, so let's move on to the last stock from the mid cap and small cap space. Remember, we also have a SIP stock, so do stay tuned. Repro India is the fourth stock from the small cap mid cap space. A very small company, around 885 crores. I posted this on Twitter recently. It had an amazing 6-year breakout. ROC is not great, 3%, 5%. PE is very high because of the low earnings, but the stock price is probably high as well, right? So here we had a sales growth that was good. PAT is not really good, but I think we are seeing a turnaround in terms of PAT. Now here, again, it is not a great company in my opinion, but something is changing this year, right? So we've seen a dip in the overall sales. And the last couple of years, we are again regaining market share probably, and the company is able to make good sales. Also, we've had some bad margins last couple of years, but this year we had some really good margins. So overall, I see this as a turnaround candidate, and it's a 6-year breakout as well on technical charts, and that's why we're discussing this company today. Also, profits have come in finally after 2 years of losses. We are seeing some profits. The interest also has not been very high. It has been kind of stable around the 10 to 15 crores mark. So that's not really concerning for me. So for me, if the company is able to increase its sales and if they're able to maintain decent margins, then we might do well in terms of stock performance. So let's take a look at the charts. As I said, the stock has given a very strong 6-year breakout, and it has done a triple bottom probably here, or has reversed from a very strong support zone here, right? So volumes have been excellent last month, and this month also we've seen decent volumes. So that makes this a very good candidate. Now remember, this is a descending triangle here that we're seeing, and we had a close above the descending triangle. Also, we have closed above this pivot point also over here. So that makes this a very interesting bet in terms of a small cap bet. Now remember, if you want to really make good returns, focus on small cap and mid cap. Because large caps, they might give you some returns in the short run, but in the long run they tend to consolidate more and they'll grind their way out, and then they will eventually head higher. So if you really want to grow your portfolio quickly, focus on small cap and mid caps, or focus on large base breakouts in any segment, right? So this stock can be bought at current market price 668. Stop loss is a little deep here, 16%. So what I suggest is, in case you find the stop loss too big, take a very small position, and on the next consolidation you can probably add more and tighten your stop loss, right? So that's one of the ways that you could do this. And we're looking for targets of 80% here, which is around 1200 levels, and that brings us to a risk reward of 4.5 times the risk that we're taking. Okay, so these are the 4 stocks from the small cap, mid cap space. Now do let me know if your thoughts on especially these stocks, because I know a lot of you would also be analyzing these stocks from a fundamental perspective. So I would like to know your views as well. So let's move on to the SIP stocks for today. Now, I have done 3 videos in the last couple of years for SIP stocks. If you want, you can check these stocks. Just do SIP in my channel and you will find 3 videos in my channel. Now, if you're a conservative investor, then it makes a lot of sense for you to do a SIP in your stocks, at least to continue to do it unless the stock is down. And if the stock is going sideways, continue a SIP, and then you can book your profits as and when the targets are met, or whenever you want to book profits. So if you're a conservative investor, then this is probably the section that you have to watch. So let's get started. The first stock today is Dr. Reddy's. Now, I did cover this stock, I think, a year ago when it was hovering around this zone over here. But I just want to remind you again that this stock has made a major bottom. Now, what are the signs of a major bottom? The signs of a major bottom is after a breakout, if the stock goes into consolidation, and especially if you see on the monthly or quarterly charts wicks like this, then that shows that there is demand. And when you see a reversal like this, that shows that the downtrend is complete, most likely, right? Most likely. In markets, everything is a probability, right? And also we had this beautiful reversal multiple times, right? And we are now heading higher. So from an investment perspective, this is an excellent candidate. You can also do a lump sum investment with the swing lower stop loss on the weekly charts. It's up to you, but I would prefer, if you're a conservative investor, to do a SIP. Also, if you see this side, we had multiple reversals. So this for me is a beautiful long-term channel. In the next 10 years, we could also head to much higher levels, not just 10,000, probably double that as well. And this could be one of the best candidates for your investment portfolio for the next 5-10 years or so. Just keep sipping every month, and yeah, let this stock, yeah, just do its magic. So that's the first stock. The second stock for today is IndusInd Bank. Now again, this is a company, a bank, which is a very good bank. It has been in downtrend since 2018. We've seen this lower highs, lower lows, and the stock kind of broke out from this trend line, and we are eventually breaking out here as well. Now this also is a nice cup and handle. I usually don't comment on the patterns because there are very contradicting views as to what is the depth of the cup, what is the depth of the handle. So just keep it simple: higher highs, higher lows, right? So here, if you see, we had three months of dojis, and then we had a strong reversal last 2 months. Now this makes a very interesting SIP candidate as well, because the stock will probably go not very fast up, but it might take its own sweet time because it's a large cap, and we've broken out from a 20 months base over here. So this stock can be bought for a target of 3,000 in the next 3 to 5 years, and keep sipping until the stock reaches its target, right? Or if once you have 50% returns, then stop your sips and then let the remaining 50% just be on its own, right? Now that's the second stock for today. Now the third stock for today is Maruti Suzuki. Now I also posted this chart exactly on Twitter multiple times, especially around this channel support when we are reversing from here. And again, we've done last 4-5 quarters, we've just gone sideways, and this month we had an excellent closing. Now, this is one of the excellent charts out there from a very good company, which posts amazing sales, amazing growth. It has a very good market share. I'd have to not talk about fundamentals here because all of us know the fundamentals for these companies that I'm covering, right? So again, we had a beautiful channel reversal. We have amazing consolidation here. So just a matter of time before we see this kind of return over here, right? So if you see here, we had a crazy move after a nice consolidation. So I'm expecting a similar move probably in the next 2 to 3 years. We're going to look for targets of 20,000, which is almost double the price from the current levels. As I said, you can also get much higher returns, but if the stock reaches the upper end of the channel, it's time to book profits. Remember that always. In all the three stocks, once the channel targets are met, please book profits. Or if the targets are met, please book profits, at least partially. The last stock for today is Hero Motocorp. Two stocks from the auto space. Now, the auto space itself has given a multi-year breakout from a sectoral index perspective, and Hero Motocorp is now participating in the entire move. Now, if you see here, Hero Motocorp also has reversed from the channel support. Right now, this is not a perfect channel like I would like to have it. So, a perfect channel for me is you have to have multiple touch points on both upper and low end of the channel. Now here we have only on the low end of the channel, but the interesting part is after some 5-6 quarters of consolidation, we are reversing with a slight increase in volume this quarter as well, right? So we see we've had highest volumes in the last 1 year or so. So this is again a very good bet. We can head to the upper end of the channel in the next many years, but for me the initial target is 6,500 in the next 3 to 5 years, which is almost almost 2.5 times from the current market price. So these are the 4 stocks from a SIP investment perspective. I have not covered the fundamentals because all of us know these companies. They are very good companies. Hero Motocorp or Maruti or IndusInd Bank or Dr. Reddy's are all very good companies. So I don't think there's a need to explain about the fundamentals here. I hope you can do some research on your own. So also just a small note here, Hero Motocorp is about to break out from this consolidation here. So if you break out, we are heading higher. So it also could be a swing candidate as well. Keep your stop loss at daily low and you can take a bet. So that's it for today. I'm going to leave you here. I hope you enjoyed my technical analysis, and if you do, don't forget to subscribe to my channel and like this video. Okay, so I'm going to leave you here. Take care, stay safe, until I see you in another video. Bye bye.